Hello and welcome back to another episode of Mindshift. My name's Luca Bersella and welcome back to part two of our cryptocurrency series. Today we're picking up right where we left off from part one, where we covered all things Bitcoin, what is money, digital gold, all of that good stuff. And we dive straight into Ethereum, the number two cryptocurrency behind Bitcoin by market cap that is at the moment smashing all-time highs along with many of the other cryptos in the market. But Ethereum, the most disruptive blockchain, to put it in a way that's, I guess, transferable to many people, there's a lot to this because the thing about Ethereum is that there's not just one facet to it. And this is what we get into in this episode. We discuss what is Ethereum and how it differs from Bitcoin, if anything. There are certain nuances, certain upgrades that are happening to the network that are going to, potentially evolve it over time and make it better as the cryptocurrency competition for the one coin to rule it all, as it were, emerges. And we discuss that. We discuss what is proof of staking, which is key to Ethereum 2.0, which we'll also discuss. And we discuss the many sort of verticals that Ethereum has introduced to the cryptocurrency industry, such as decentralized finance, DeFi, non-fungible tokens, NFTs. Although, disclaimer that we don't have enough time to cover all these topics, but I'm sure we will circle back to them in future episodes. As normal with an episode like this, please note that anything we say, myself, Luca Steiner, and Jonty Quenet, my guests in the show, anything we say is merely our opinion. This is not meant to be investment advice. We are not financial advisors. So please do your own research before investing your money in these things. And your capital is at risk. Just the necessary disclaimer before we get into this episode. As always, please reach out to me on Twitter at Luca Bers, LucaBers, with any feedback on this episode and what, if any, what topic in crypto you'd like us to tackle next, if possible. I definitely want to bring these guys back on for another go. So please, without further ado, please enjoy our conversation, part two on Ethereum. I want to segue into Ethereum from here, which is the number two cryptocurrency by market cap, currently, to Bitcoin. Like I mentioned earlier, it's trading close to all-time highs at the moment. And it was created by a bunch of guys who, from my perspective, at least how I've read the story, is they became a bit disenchanted with the Bitcoin community to an extent. Jonty, do you just want to touch on the origins of Ethereum and what exactly it is?
Well, Ethereum basically introduces the idea of a smart contract to the blockchain. So that's just like a one-liner, but I actually want to go a bit further back. So there's this funny interview that Vitalik Buterin had, and Vitalik is actually the creator of Ethereum. And he was playing, well, basically his first encounter of hating, centralized authority was when he was playing World of Warcraft, and his character maxed out, and the developers of World of Warcraft actually reduced his ability to attack people. So they reduced his attack gain or potential, whatever his power was in the game. And he was so upset that someone could go in the back end and just change what his World of Warcraft value character was. So anyways, so that was just while he was much younger. And then since then, he kind of went on this ramp about, pushing towards a decentralized space. And he then came across Bitcoin and what Bitcoin was, and ultimately started traveling around, meeting with people in the Bitcoin space, trying to find a job. And he started writing, he got a job as a guy just writing little articles about Bitcoin and the developments in the technology, and he was getting paid 5 Bitcoin per article. And ultimately, he came to a point where he realized that Bitcoin is great, but it's one-dimensional. There's a world of possibility out there with blockchain, and that is in the form of a smart contract. And that's when he wrote the white paper for Ethereum and ultimately brought in a bunch of his friends, like Gavin Wood and Charles Hoskin and, Anthony and Jeffrey and a bunch of them. There was a whole group of them. And ultimately, they then developed the Ethereum Foundation and started building what Ethereum is today. And just the introduction of bringing smart contracts to the blockchain allowed the blockchain to go from a peer-to-peer payment mechanism to a fully programmable network, like a network where you can build decentralized financial applications. You could build gaming metaverses. You could build collectibles. You could build supply chain mechanisms. Any traditional sector could be built on this programmable network. So that was pretty much the whole idea of what Ethereum was now going to be. Take what Bitcoin is, be what Bitcoin is, but improve on what Bitcoin cannot do. And that was the addition of the smart contract, and that allowing people to build dApps, which are decentralized applications, basically.
And Luca, touch on just not. Jonty mentioned smart contract a few times. Touch on what exactly a smart contract is and how it works from a high level view, like sort of how we were touching on mining and the technicality of Bitcoin. What exactly is a smart contract and how does it sort of work in practice?
Well, I think you can draw a quite direct parallel with contracts in everyday life, be it social contracts, legal contracts. If we have an agreement that, we go rock climbing on Thursdays, you could have a kind of equivalent smart contract formulation. Again, this idea of states comes in. So smart contracts, when they're written, you agree on the rules, be that rules of engagement, value transfer rules. They can come in any form. And you agree on that state, and then, unless you create a new state, you're basically locked into that. And I think within that comes this feature of enforceability. So you agree upfront, we're going to reach an agreement, we're going to write a smart contract, that's going to be enforceable effectively. Whereas if you look at your kind of social agreement in the everyday life, if we have an agreement to do something on a Thursday, there is some flexibility. Even with legal agreements, you can be 5 days overdue on a debt repayment. Like with the Evergrande situation in China at the moment. Like, you can have really serious agreements, but there's still some real world flexibility. And what smart contracts do, and that flexibility comes in due to kind of a flexible trust element, which is still there. With smart contracts, it removes the trust element because these contracts are enforceable effectively. So the easiest visualization is the following. If you want to take out a loan in crypto, you provide collateral, that being an asset, and you put that down and you say, I'm going to take out a loan. So you can put down an asset of $100 and you're going to take out a loan of $50. That $100 you're putting down is your guarantee that you'll repay the loan. If the value of that collateral drops below some certain LTV, basically some certain loan to value, then you get liquidated. There's no way out of that. So if you don't repay the loan, you will be liquidated, right? If the value of collateral nears the loan kind of too much. So you have this concept of enforceability, which comes into smart contracts and kind of trustless agreements. So on the one hand, that's great because they're trustless, and on the other hand, you lose the real world flexibility.
And I guess, Jonty, maybe you can echo this. I guess this becomes so important because I would think that essentially now Ethereum is essentially programmable money. You can create and do whatever the hell you want with this. Am I right in saying that?
You are correct. Ethereum, anything and everything can be built on Ethereum. I mean, I can go and deploy my own tokenized asset on Ethereum in half an hour if I wanted to. So it is fully programmable, and it is open source, and anyone can build on it, which is fantastic. But it also comes with a lot of sort of negative impacts as well, because anyone can deploy what they want on Ethereum. So you have to be, really sure about what you end up building into and buying into and researching into when you're looking at the Ethereum ecosystem, because there's a lot out there and it's a busy space. But yes, it is basically a programmable money. But again, Ethereum on the money side of things shouldn't be looked at as a medium of exchange, because like Bitcoin, it's volatile in nature. And the thing with Ethereum is it's not it's not deflationary. It's not fixed in supply. There's a constant daily emission rate, and we've had various upgrades to the network which introduce a burn mechanism. But at the end of the day, there's still an emission. So while it is a programmable money, don't use the term money as this is now the next possible global form of payment.
Yeah, well, I think I guess what you've both alluded to, I guess, is to summarize sort of Ethereum, what it is. I guess I would look at it more. Yeah, I guess I maybe said an era programmable money where I should have more said a programmable supercomputer, right? And open source completely, right? Because I think that's what Ethereum is essentially, right? It's a global supercomputer that you can use to enter into contracts with people. So obviously we have this global supercomputer, and we've already drawn sort of the conclusion that Bitcoin can be dubbed as digital gold. So I guess then, and I've heard this analogy from the Winklevoss twins, who, if you don't know their story, I would highly recommend you dive into their story. The famed, obviously deception with Facebook and everything, and how they discovered Bitcoin and now are big crypto advocates. They describe Ether, and Ether is the sort of the cryptocurrency that powers the Ethereum network. They describe Ether as digital oil versus Bitcoin being digital gold. And obviously digital oil, we know oil is used to power the world, basically, which we're trying to move away from, obviously. But essentially, I think it's a great analogy, because you basically deploy Ether to create these different projects and to create things on Ethereum. And how do you sort of, when people talk about, how big can Ethereum get? You can't, and I guess we're going to talk about sort of the nuances of the network. But how can you sort of put an upper bound on creativity, that your only limit is how creative humanity can be in what they build? And I think for me, that's something truly amazing. And it's never truly been seen before. I mean, you could draw parallels to something like AWS, but I guess AWS is a centralized body that you are, exchanging dollars with to rent computer space, but and build your systems on top of AWS. But I think Ethereum is more, I guess the capabilities of it are further stretching. So Jonty, talk about how the Ethereum network actually works. The blockchain essentially has been working on a proof of work system, as we've discussed already, and is looking to move to proof of stake. So maybe define what proof of stake is, and how, if there are any certain nuances that are different to Bitcoin, explain those.
Yeah, so as you said, Ethereum is obviously currently on a proof of work consensus, which isn't ideal. We can look at proof of work as going out of date. In the crypto world, things move so fast, and proof of stake or POS is the new sort of consensus mechanism that projects are adapting to, and there's various reasons why. There's a lot of benefits over proof of work, and the main one for me is it's got a stronger immunity to the idea of centralization, and that draws back to what Luca was touching on with when China had majority of Bitcoin miners. Wherever the hub of Bitcoin miners are, there's some form of degree in the mining of Bitcoin nodes. So, introducing an idea of proof of stake you're removing the idea of centralization, because anyone can technically set up a staking node. You just have to stake a bunch of ETH. That's the bottom line, and you become a validator in the network. There are a bunch of other advantages of proof of stake as well. And another more topical one is it's more energy efficient than the whole proof of work mechanism. And basically, I mean, if anyone was going through the whole thing with Musk and all that sort of social upcry about how Bitcoin is so bad for the environment, something like proof of stake completely removes any form of energy intensive usage, because it's not requiring computational power to mine blocks. It's using staking nodes to validate transactions and to broadcast those transactions. So the whole idea of a shift to proof of stake is just a much more efficient, much more scalable, and much more environmentally friendly way of approaching blockchain.
You say that Ethereum's move to proof of stake, would that potentially increase transaction throughput? Because I guess you have a potentially more efficient process for proving transactions and basically executing transactions.
Well, basically, in order to run a proof of work node, like I mentioned with Bitcoin, there's a huge barrier to entry for miners. So it's an extreme capital cost to run a mining node. But when you shift to something like proof of stake, you can basically use your cell phone as a node. So what's happening is there's a lower barrier to entry for various network validators, which allows a faster or a higher volume of transactions to be placed through the network. If you look at the current scalability of Ethereum, anyone who's worked with Ethereum will understand the idea of a gas fee and how crazy expensive it is to do anything and everything on Ethereum. You want to just send money from one place to another, you're paying a couple dollars in fees. So this all comes with the whole proof of work consensus, because it takes time to do the work to prove the node and broadcast it to the network. Proof of stake is almost instantaneous. It's the transaction gets broadcasted, it runs through the validator nodes and instantly gets placed on the network. There's no work required to approve it. It just runs through the security measure of all the nodes. So it's a lot more efficient process, a lot less barriers to entry, which means more nodes can be set up, which means there's higher volume to move through the network. And I mean, this can be directly shown comparing something like, Binance Smart Chain or Terra Luna to Ethereum. Proof of stake highly reduces the gas fees, and it really increases the amount of scalability that can run through a network.
It's probably good then to move on to what assigns Ethereum value, what gives the network value. And I guess you guys can touch on, we can touch on DeFi, NFTs. Is that what's sort of driving the main value for Ethereum, the main sort of attraction to it at the moment?
Yeah, I mean, I think as economic activity migrates from one network to another, value is transferred as well. As kind of financial primitives start to exist on Ethereum and activity comes from the physical world or Web 2 into Web 3 and Ethereum, value is transferred. And I think definitely that the price of Ethereum, the value of the overall network, is directly proportional to the activity on the network. So I think as regards decentralized finance applications and non-fungible tokens, kind of those cultural phenomena are driving Ethereum, definitely.
And Jonty, if you were to describe to someone what I realize I said DeFi without explaining that it's short for decentralized finance. How would you describe that to someone just coming into contact with Ethereum or this whole concept, and why is it so valuable?
Well, I mean, I strongly hate the term bank, but I would describe it as a decentralized bank. That's basically the easiest way. You can go onto a contract, you can take out a loan, you can earn a percentage yield, you can offer collateral. You can basically do what you would do at a bank, except this is in a decentralized space. So, like Steiner, touched on earlier in this chat, if you want to take out a loan, you offer collateral. So it works like a bank in a traditional sense, except it removes the flexibility of the real world, as Steiner did mention. So a DeFi contract is basically your decentralized banking system.
And that, I guess that's so valuable is because you're removing the middleman. You don't have to go through, Standard Bank, Nedbank, Barclays, or this intermediary. You can do it trustlessly peer-to-peer.
I think we need to be realistic though as well, to the extent that maybe basic retail banking functions are being transferred slowly, but more complicated aspects to it are definitely not close to solving issues like over collateralization, like capital efficiency. For example, like the best place still to get a loan if you're in Europe is probably from your bank, right? For a house, like larger denominated, larger loans denominated in your local currency. It will take time for sure. It is a wonderful feeling to use decentralized finance, to transfer money, to take out loans, to partake in project financing effectively. It really is a wonderful freeing feeling. And at the same time, we still have a long way to go, I think. And I mean, particularly wholesale functions, I mean, we're nowhere close.
Well, why is that, Luca? If you can sort of tie down one reason, why is it just not as good yet?
It comes down to the flexibility point. So if you think of real world agreements and you want to distill that down to a contract, what can you really say right at the start will need to happen in the future? You will need to account for in the future. Because like I said, you can put collateral down. If the value of that collateral drops too much, your position gets liquidated and you incur quite a heavy loss generally because you're over collateralized. Right? Like if you think of large loans, imagine, wanting to buy a house for 500,000 euros and you've got to provide a collateral of 750,000 or $1 million, as is the case, right? Like the whole idea of debt is kind of, you don't need all the money at the point when you take out the loan, right? I mean, otherwise you could just buy the asset. It's kind of like, how can you over time accrue more assets with debt? Sure. But these processes are not, not efficient yet. And B, you've got that limitation of needing to know upfront what's happening. So if you think of like corporations and their interactions with banks, they're very complicated and very flexible and things are changing the whole time, right? Evergrande, which defaulted on its corporate debt, it's not like, a switch flipped and suddenly a bunch of assets were liquidated and creditors were repaid. So it's like, to what extent can you automate functions? Like basic retail functions, payments, for example, is easy enough to automate because, you need to just check on both ends that everything is right and you just do the transfer. You don't need a middleman for that.
So Luca, do you think we'll get there at some point? Do you think we'll get to these very complicated transactions?
There's a project at the moment on one of the blockchains, which is actually trying to tackle the whole over collateralization issue. So generally how borrowing and lending works in crypto is you've got a pool, creditors deposit into this pool, and then people can come and borrow from that pool. So you've got a utilization rate, which is hardly ever at 100%. So you've got this capital sitting here, which is not doing anything. It's not efficient. So what this project is not doing is they are going to, for the first time, I think, at least to my knowledge, they will themselves borrow from this pool to ensure maximum utilization at all times, almost like a bank, right? Because you've got deposits in this pool. So this bank will come in and look, okay, what is the portion that is not borrowed out yet? We're going to borrow this ourselves and deploy it in yield farming activities. And so you basically have a full utilization. And as a provider to this pool, you know, you just have an effective transfer there.
Sure.
Yeah.
And what is, just for everyone listening who's not familiar, what exactly is yield farming?
So, I mean, at its simplest, you're earning interest on some asset, right? Like you're doing something with this asset and you're being incentivized with rewards in the same asset. So like if a bank wants to incentivize you to hold bank deposits, it's going to pay you a rate on that, right? And it's the same thing with yield farming. So it's just related to earning something on your capital in whatever form it is and wherever it is, and it comes in various forms. Yeah.
Great. And then moving on to the other things we're seeing on Ethereum, Jonty, what are the biggest sort of projects that have been built on Ethereum, and what's sort of the most, because I know we mentioned, you know, we haven't talked about, we've mentioned decentralized finance, we've talked about non-fungible tokens, which we can touch on. There's also you know, decentralized autonomous organizations, which shortened to DAOs. But what are the biggest projects out there that people could have a look to sort of inform themselves about what are the type of things being built on Ethereum right now?
Well, you know, to be honest, like the main sectors, in my opinion, on Ethereum, there's three main sectors that should really focus their attention on if they're going to start looking into these ecosystems, and that's DeFi, you know, which we have touched on. It is, you know, the narrative of collectibles, so NFTs, and then it's metaverse, you know, metaverse in the gaming industry. There's huge business potential for shifting to blockchain gaming, and, you know, metaverse interaction, buying virtual real estate, buying, you know, virtual in-game assets, trading those on open markets, turning them into tradable collectibles. There's huge potential. But when it comes to Ethereum, you know, largely there's been so much development over the past few years that I don't want to say everything's been created, but almost everything has been created. You know, when it comes to innovation, you got to turn to sort of other layer one smart contract competitors. And, you know, layer one being Ethereum is a layer one project. It's a layer one blockchain. You know, projects that are competing with Ethereum pretty much take the narrative of what Ethereum is and improve on it. So for example, like Solana, you know, it takes what Ethereum is, adapts its consensus mechanism to have a proof of history addition to it, which ultimately allows it to be significantly more scalable. You know, where Ethereum is pushing 7 transactions per second, Solana can push up to 400,000. So when it comes to the adoption of sort of metaverse and gaming and, you know, yield farming or NFT collectible trading, you know, these layer one smart contract projects are running are like the forefront of innovation in the ecosystems because they have the scalability to do so. You know, this also brings the narrative of layer two, which is like Matic, you know, projects that are building to improve Ethereum scalability, projects like Polkadot, which are not looking to replace Ethereum as it will be the backbone of cryptocurrency, but they're looking to be completely interoperable with what Ethereum is, but ultimately improve on the scalability and security of it. So to highlight specific projects to look into is difficult because there are so many out there. But to highlight the narratives to look into, you need to look into the layer one smart contract platforms that are improving on the broken issues of Ethereum. Because ultimately, even though ETH is upgrading to proof of stake with the elusive ETH 2.0 upgrade coming sometime next year, it's still not going to match what some of these other blockchains that were initially built from the ground up to improve on what Ethereum's issues are. For example, Gavin Wood, he left Ethereum because he realized that ETH would run into scalability issues when we reached a certain point in mass adoption. And right now, I mean, as of last year, we've largely reached the cap on what Ethereum's capable of doing when it comes to mass adoption, because it's just pricing out significant amounts of people because of gas fees. So Gavin Wood kind of built Polkadot, from the ground up as a technology that focused on improving, well, firstly being fully interoperable with Ethereum. So it's not there to replace Ethereum. It's there to improve on Ethereum's scalability issues. And I mean, Polkadot is essentially infinitely scalable. So when it comes to looking into the space, like I would suggest, look into the smart contract competitors that are improving on what's currently broken in Ethereum, because that's where the most innovation is happening. For example, this project that Luca brought up now, that's trying to tackle what banks do in the real world. Projects like that are building on competitor chains. They're not building on Ethereum because it's just too priced out. It's too expensive. And if they are building on Ethereum, they switching their back end to interoperable chains or layer 2 scaling solutions and just using the front end on the Ethereum network. So to really find the innovation, you need to look at the bridge protocols, the ones that are allowing blockchains to interoperate with one another. You need to look at the layer 1 and layer 2 solutions that are improving on Ethereum's mistakes.
Yeah, that's brilliant. No, and just to summarize a bit there were a bunch of things that came in there. Just to attach some, I guess, definitions or summaries for people listening who maybe aren't too familiar. Layer 1, you've got layer 1, which is maybe Bitcoin, Ethereum, and other smart contract platforms that are being built from the ground up. That's like your base layer blockchain that everything else gets built on top of. It's your computer base. It's your Excel, Microsoft Excel that things get built on top of. It's your AWS that things gets built on top of. It's the key infrastructure. Layer 2 then comes along, and Uber, for example, is layer 2. It's Web 2. It's built on top of Google Maps, on top of AWS, for example. And what Jonty mentioned, Polkadot is a layer 2 that's building interoperability, which is basically allows blockchains to communicate with each other at a simple level. As always, Luca and Jonty, correct me if I am wrong on anything.
Can I just jump in there quickly?
Yeah.
I shouldn't call Polkadot a layer 1. I mean a layer 2. Essentially, okay. Polkadot's actually trying to be a layer. Yeah, it's trying to be a layer 0 solution, is what they call it loosely, because it's a brand new technology that's been introduced into the space that's never ever been used or done before. It's a whole new level of approaching the fundamental base of what blockchain technology is. And it's introducing a completely innovative new way of approaching scalability in the network. And this does this through its relay chain technology, which ultimately has Polkadot parachain slots. And each of these slots essentially runs as its own blockchain. And Polkadot acts as the connection between these blockchains. So it is infinitely scalable. Yeah. So it's technically a brand new tech. So we can look at it as a layer 0, basically.
Yeah, and I think we'll have to, I'll have to bring you guys back on to maybe do a deep dive into Polkadot or some of these other exciting projects. As the audience can hear, there is a ton of meat to all of these topics. And I think moving on to Ethereum has sort of truly blown open the rabbit hole, I guess. But yeah, I guess, Jonty, just going back and playing, I guess, devil's advocate to a bit of what you were saying, there's a protocol change that came in also, I think, in July to Ethereum, the EIP 1559, which basically, to the audience, we were talking about sort of incentive rewards for miners and people who validate and secure the network, where, correct me if I'm wrong, that those rewards or those incentives being paid out to people securing the network, a portion of that was now being burned. And then the remainder you have are tips that basically do go into circulation as extra ETH. So obviously, as part of securing the network as a miner or as a node, obviously you'll be a validator when they move to proof of stake. you get a supply of ether as a reward, right, as an incentive mechanism. But part of that new protocol, the EIP 1559, that destroys, actually physically like destroys or burns some of those rewards, therefore decreasing the supply, the overall supply of Ethereum in circulation. And I guess, to play devil's advocate, does Ethereum not have actually a chance in the future, bringing in with ETH 2.0, with proof of stake and this new protocol where they're starting to burn ether? And I mean, there's record numbers. I don't have numbers on me right now, but you basically have this body of thought that is saying that Ethereum is going to become ultrasound money, where it's actually disinflationary. Whereas if you imagine Bitcoin has a hard cap of 21 million, if you can see me on video, it's a straight line. But Ethereum actually has a downward trend now. It becomes disinflationary. What are you guys' opinions on that?
Well, I mean, there's a lot of misconception around what EIP 1559 is doing for Ethereum, and it's not made it a deflationary asset. The way it was presented was that now Ethereum is going to be deflationary, but that's not necessarily the case. There's many days where the emission rate of Ethereum outweighs the burn rate. And yes, it does slow down the inflationary mechanism of what ETH is, or your emission rate on Ethereum.
The emission rate being how many Ethereum,
how much new
ether
ETH is put into the markets each day. But it has not made it a deflationary asset. And that's something that does need to be made clear, because a lot of people do run into that issue. But that's not to say that down the line it can't become one. And I don't want to say that, Ethereum doesn't have a place in the future. I think Ethereum is the future. I don't think ETH 2.0 is the future. I think ETH 3.0 or 4.0 or 5.0 will maybe be a side of what the future should be. But that's why these layer one smart contract projects like Polkadot, like Solana, like Terra Luna, Zilliqa, like, Binance Chain, all these other smart contract platforms that already have what ETH 2.0 is going to promise. They're the ones that are going to drive the forefront of adoption, because ultimately they are what ETH 3.0 or 4.0 will be. And that's why the name of interoperability is so important. And the basis here is that, ETH will always be the first mover in the smart contract space. Like Bitcoin will always be the first mover in cryptocurrency. Ethereum currently has, 95, 96% or whatever it is of all developments happening in the crypto space is on Ethereum. Most developers work with Solidity or the programming languages on Ethereum. They don't want to switch over to blockchains like Cardano, where they have to learn a completely new language and has no interoperability capabilities with Ethereum. So by using EVM compatible, networks like Polkadot projects or like, Binance Chain and things like this, where there's a level of interoperability between the platforms, that's what's going to allow these developers to bridge the back end to scalable solutions, but remain ultimately an Ethereum-based project. So I think Ethereum will always be the biggest entity. I think Ethereum will flip Bitcoin. I think Ethereum will be the #1 cryptocurrency because it's the programmable blockchain and it has the use case for mass adoption. But I think there's huge room for the layer ones to improve of what Ethereum can't improve on. And ETH 2.0 is great, but it's definitely not going to be able to solve the issues that Ethereum's currently facing.
Luca, what's your opinion on this? And then I want to get your thoughts on where you guys see, well, I guess Jonty's just given his thoughts on where he sees ETH in the future. But Luca, what are your thoughts on the newest upgrades happening to Ethereum, the Ethereum network, and where do you see it in the future?
Well, I think just on your question of, Bitcoin being sound money and ETH being ultrasound money, I would go back to Jonty's point on interoperability, and that, with Twitter's integration of the Strike API now, using basically a Bitcoin layer 2, we've got free remittances worldwide. If this is somehow reconfigured into payments in the more standard sense, then we've got sound money, which which is also a good medium of exchange. Like, I don't think Ethereum's place is to compete with Bitcoin on being sound money. I think Ethereum's place is the home of applications which where real world processes, contracts have been transferred, like particularly financial primitives, decentralized finance, derivatives. So I would say Ethereum's place more generally and in the future won't be to compete with Bitcoin in terms of being sound money, but rather, to your point, also being the oil of the digital economy, effectively.
Amazing. And guys, I think we pretty much covered everything. Can feel my head slowly getting to the point of explosion with the amount of info you guys have given, but it's been amazing. I hope we've provided as much value as possible, and this has been a good sort of on-ramp into crypto, and just given the idea of where where a good starting point and where people need to dig in more. A lot of this stuff is definitely, for further research and further reading and looking into it further on your own accord. There's only so much we can say in just an hour and a half, 2 hour podcast. But guys, I just want to get, like, as a sort of a closing, what are your sort of ambitions? What's your outlook for crypto in the future? Jonty alluded to what he thinks is going to happen. Where do you think, if you were to say to people, where should they be spending a lot of their attention or sort of looking into in the future? Where would that be, Luca?
I mean, I would say my regret is not studying computer science. I think, to quote someone else, I can't remember the name, but software is eating the world, and I think that can't be any less true today than it was, when that was said a couple of years ago.
Mark Andreessen.
I mean, Andreessen.
Yeah.
So I think, I'm looking at options for myself to jump over. I definitely think that the future of finance is not going to be found in a regulatory swamp, and until there's some sort of clearing out of that, it's going to be many decades. I think there's a reason why the space is so innovative, and I think over the next 10 years, the right bet is to get involved.
And in saying that, you don't think the future lies with Goldman Sachs or Visa or MasterCard or
I think,
or JP Morgan?
No, I mean, maybe not. Let me not say that. I mean, these big companies, they will assimilate crypto innovation into their business functions. I think traditional retail banking will be wiped out by crypto, but it will be replaced with digital fintechs, etc. I just think the space in general, cryptocurrency, it will find its way into every banking financial institution in one form or another. And being part of that wave, I think having some understanding of the space, it's going to be an exciting ride.
For sure.
I mean,
that's another conversation for itself. Jonty, what are your thoughts?
Yeah, I mean, we just got to, keep in mind, Bersella, I think you touched on it earlier, is that we're being in the space right now. It's so early. You're front-running institutions, but not only that, you're front-running governments. You're front-running countries. You're front-running 97% of the world on this emerging asset class. So, it is a long journey, and I think it's decades, before we see true global mass adoption. And I agree with Steiner that, every single sector in the traditional world will have some form of their, offerings based on blockchain and based on cryptocurrencies. I think crypto will find its way. I agree. I think crypto will find its way into any and all sector. There's use case for it everywhere. But ultimately, one thing is it's going to be volatile, for these next couple of years. But I think the next 10 years in cryptocurrency is probably going to be the most exciting time that anyone could ever imagine, because we are at the forefront of that global adoption push. And, that's not to say we're going to be adopted overnight, but, I think it's the start of the push now, and things are about to get, rocket fueled.
I will bet you guys, someone along the way is going to say something like, software ate the world, crypto is eating software.
Well, Luca, maybe you said it. Maybe you said it.
I don't know. I'm sure someone will have beaten me to it, but I would not be surprised if that emerges as kind of a thesis of the next decade.
Well, look, I think.
Everyone. Sorry, Bersella. I think just one last thing. Everyone looks for the decade investment. Everyone looks for what's going to be the best 10-year investment. When we reach 2000, 2010, 2020, 2030, 2040, and so on. And I think cryptocurrency is the decade investment of this decade. And I think, Bitcoin, was definitely one. And, there are various other traditional asset classes that also did well. We had .com and all of those things that really exploded. But, I think this decade is the adoption of cryptocurrency. And I think as regulation steps into play, I think gaming and metaverse is going to be a huge, huge uptick over the next 10 years, because ultimately decentralized finance will bridge institutions and governments into cryptocurrencies, because it's all about payments and finances. But metaverse and gaming is what's going to lead retail adoption of the cryptocurrency space. And that's not a sector that anyone should take for granted.
Maybe to add to that, Jonty, I think people should be asking themselves first, why does Visa crypto exist, and why is the profile picture of Visa crypto a CryptoPunk?
Exactly.
Exactly. No,
I think if you can answer that question, then you'll do well over the next 10 years. Yeah.
I agree.
I'm gonna have to bring you guys both back on here to have another chat, because there's so much we left off the table. I mean, I addressed Jonty's profile picture that he's got in there, but there's definitely more to do. There's definitely more to NFTs than meets the eye, I guess, from a cultural significance standpoint. And that's just one area. Jonty's mentioned countless times: gaming, metaverse. I'm gonna have to bring you guys onto another episode. But with the final question, if you guys could name one resource or one person to follow as an on-ramp into crypto, just to pay attention to, just to sort of wet their beak, I guess, to an extent, in terms of like just getting exposed to the content, what book or what person would you tell people to follow, Luca?
That's an incredibly difficult question. For me, maybe like kind of like putting things into perspective. And I know you both really enjoy this podcast as well, is actually the All In podcast. I think with time, there's been more crypto themes, and it's always in the backdrop of kind of the more traditional view of these capital allocators. And I think just listening to that will give you a good foundation, I think, over time, and quite a light intro. Yeah.
Brilliant. And I mean, they do have a lot of their topics say, they'll say crypto, or they'll talk about Solana or something. So you'll find it easily. Jonty, what's yours?
I mean, I have to agree. I was also going to say the Bankless podcast. I mean, the All In podcast is definitely one to tune into. And in addition, the Bankless podcast. All In, they speak more on a macro scale. They touch on a lot of cultural, political, financial issues, globally, not just fixated on crypto, where, the guys at Bankless tend to, shift discussion more internally in the crypto space. Not to say that they don't touch on the macro space as well, but they often have, really interesting speakers come and talk. For example, the creators of Axie Infinity and, all these other sectors. They had the creators of Uniswap, which is one of the biggest DEXs, decentralized exchanges within the Ethereum ecosystem. So they have really interesting speakers come onto these podcasts. And honestly, podcasts are the best way to introduce yourself to the crypto space. Don't fall for the noise on Twitter. Don't fall for the noise on YouTube, because most of these guys just want to pump their bags. The fundamental success in cryptocurrency comes from understanding the space and understanding the mechanisms. And the only way you learn about that is from OGs in the space who have knowledge on the macro perspective as well as the micro. And the guys at All In and the guys at Bankless are probably some of the smartest minds I've ever listened to. Yeah.
Just to add on to that, maybe one point. Sorry, Luca.
No, go for it.
I think it's worth highlighting again that what I think 95% of people on crypto Twitter are trying to do is project financing. So
yeah,
they're all very biased. So definitely agree, podcasts, best way to dive in. Yep.
Yeah, and then I mean, I guess the advice there is to listen to podcasts, consume them, get the idea, and then do the work. Like we've said, this is a long slog. This is a long journey. Take your time. You've got to put in the hours. You've got to read the reports. You've got to, you know what I mean? You've got to just do the work, do the reading, do all of that stuff. And a great piece of advice I heard, is to actually like try these things out. Actually get on the platforms and stuff like that and interact with stuff. Instead of just, because you can read until your brain explodes, but until you actually get out there and try, for example, I guess that's the way. But yeah, guys, this has been brilliant. I'll plug your guys' socials and Discords and all of the good stuff in the show notes below. But quickly, where can people get a hold of you if they want to reach out? Is Twitter the best place, Luca?
Yeah, Twitter's best.
What's the username for them? What's the handle?
Surname, first name. What's the that symbol?
Underscore. So it's
the underscore
at Steiner _ Luca and Jonty. Where can people find you?
So Steiner Luca _.
Oh, Steiner Luca _ Jonty, where can people find you?
Yeah, so I mean, I'm very active on various platforms. I've got Telegram, Discord, and Twitter. I mean, I wouldn't say I've got a big following on Twitter, so don't expect fireworks there. But I'm very actively sourcing a lot of news information and things like that from Twitter, and I'm probably most active there in terms of responding to general questions. So you can just find me on Twitter at Jonty Quenet. And then, I know Bersella touched on it earlier, but I do have a Discord channel where, I sort of guide a community of people through trading the cryptocurrency market, finding yield farming opportunities, and, just generally reducing the amount of time they have to spend in the space by making information, accessible to them. So, I mean, if you guys are interested in joining that, there's a Discord users link as well.
Which is linked below as well. So you can go check all of those links below. Luca and Jonty, it's been an absolute pleasure to have you guys on the Mindshift podcast. I'm sure if you guys are keen, well, I'll have to bring you back. We've still got plenty of things to discuss, but thanks so much, guys, for your time, and happy looking into crypto to everyone else.